Sandra, thanks very much for coming through the 2010 overview of the electricity industry in Namibia. I've just given the figures. You're expecting it to be valued at $790 million by the year 2014. What's going to drive this growth?
Well, essentially that's going to be the mining sector, and the tourism sector. As you know, there were a couple of uranium mines rather that were mothballed in 2008 at the peak of the global recessions. These uranium mines, will be commissioned again first quarter of 2011, and then you also have two uranium mines, one from Areva and the other one from Forces, that will be commissioned in 2011 and 2012. You've got these that other mines from two other companies that were also expanded. So you understand that these three factors will make the demand for electricity rise sharply, especially because of the mining sector.
All right, now you talk about the uranium mines and expansion in that sector, and we know that there's a synergy between uranium and the production of civil nuclear energy. Is nuclear going to form a significant component of Namibia's energy mix going forward, and how much investment and concerted effort is coming through from the state?
At this stage, it's early to say. For now, Namibia's got three different feedstocks that they use currently for energy. They have coal, they have a diesel generator, which is Paratus power station, and they also have an hydropower station. So these three are the main feedstocks used currently. It is a bit too early to talk about nuclear power and energy produced with nuclear. So, but it will probably be in the next 5 or 10 years that Namibia can consider maybe going into that direction.
In terms of regulation, I mean, there's lots of talk about liberalizing the sector. The opportunities for independent power producers within the context of what's happening now?
Well, again, Namibia is trying to create a conducive environment for IPPs and for investors and for OEMs to come more into the country and invest. So a lot of things are being done currently by Namibia in order to make it possible for IPPs to come and invest more in the country. So it is expected to be more, I would say, friendly for IPPs to go and invest in Namibia in the next couple of years.
And the areas where potential new investments will come through, I know the emphasis right now is on power generation, transmission and distribution, but in terms of the offsets and the related industries that could emerge from growth in the power sector?
Beg your pardon, can you please repeat the question?
Could you just tell us about how other related industries are likely to emerge as a result of this growing demand?
Well, you have the tourism industry, as I mentioned earlier, that is also benefiting from this demand or increasing energy that is going to be available to the rest of the country. So there will be more job created as a result of that. So we expect the economy as a whole to benefit from more energy being made available to Namibia.
All right, this bullish sentiment, Sandra, to what extent has the factor of imported electricity, imported inflation, and the fact that tariffs are rising in South Africa, and that will obviously have a repercussion in Namibia, how much of that has been factored into these projections about the growth of energy in Namibia?
Well, indeed, with the growth or the increase in tariffs for electricity in South Africa, as you know, South Africa is a major partner for electricity with Namibia, to Namibia rather. So there was an impact, obviously, of that increase that was felt in Namibia, and Namibia started increasing its tariffs as well. But Namibia is also trying to sort of reduce that dependency on South Africa in terms of energy. Namibia is now making business, I would say, more with Zimbabwe and other countries like that. Namibia has got agreements with Zimbabwe, with Congo, with Zambia, and with other southern African partner countries. So yes.
You mentioned the fact that demand is largely going to come from growth within the mining sector. But what we have seen, Sandra, is that mining investments have tended to dwindle because the costs of mining are growing, with technology being a very intensive element of the process. In countries like Zimbabwe, it's also the fact that electricity costs are rising, which then impacts on the capex that mining companies are able to do. Are these realistic projections going forward, just given the rising cost of mining, the technology required, and then also the rising cost of electricity? It's put a lot of investors off.
Yes, indeed. But Frost and Sullivan, we are, in our projection, we've taken into consideration all these elements, and we believe our projections are realistic, given the investment at the moment in the mining industry. So all that has been taken into consideration, but that 700,000 million that we predicted is what we expect the market to grow to. But obviously there can be different factors that will come in and pair and this growth. So we'll see.